Hey everybody, welcome to Al Stock Trades. In this video, we're going to be talking about some important things regarding the Fed minutes, Ray Dalio, Michael Burry, Chinese stocks, President Biden's bill, and a couple of other things. I've written down some notes, so it might be a little bit uneasy for me to, I usually like talk to you guys from memory, but I wanted to make sure I get you guys all this information, so please bear with me. This will be the first time I'm doing this here. So, regarding the Fed minutes, the Federal Reserve just released their Fed minutes today, and they said that they're going to continue hiking until inflation subsides. And some of them were like, hey, even if inflation subsides, we might do a little more just in case inflation is dead. Kind of like you see a bug, you want to hit it a little extra more to make sure, hey, okay, it's dead. Right? So just expect that. And the market is anticipating them to ease off these next couple of months as these new data points come on in, okay? So Biden signed his Inflation Reduction Act yesterday, which is approximately $437 billion in new spending. This bill provides a range of tax credits and energy provisions for electric vehicles and caps on drug prices, and a new 1% tax on stock buybacks and a 15% minimum tax rate for large corporations. Now, the market was uneasy this morning because UK registered its first double-digit rise in inflation in 40 years. Now, Bridgewater Associates, whose founder is Ray Dalio, one of the biggest bulls on China, dumped his firm's entire position in Alibaba amid a fire sale of its holdings in U.S.-listed Chinese stocks. Dalio has historically been a champion in in China and the one-party government since he visited the country in 1984. Bridgewater sold 7.5 million American depository shares, ADSs, if you guys don't know, Google them, in Alibaba, and its position in 4 other Chinese stocks, including JD.com and Didi. So why Dalio made this change is quite unclear. He hasn't completely soured on Chinese stocks, as he still kept his position in tech giants Tencent and Baidu. If I mispronounced it, it's spelled Baidu. Now, the move comes amid a slowing of the Chinese economy, but increased tensions are surrounding Nancy Pelosi's visit to Taiwan. Dalio mentioned last week that he was very concerned about the crisis in Taiwan, and essentially what he stated was, personally got me scared, was what is happening now between U.S. and China over Taiwan is following the classic path to war. And if you know the channel, we've talked about Ray Dalio, about his little upside-down parabolas on the New World Order, and this guy is very highly intelligent, and he's great at teaching. So this is something I'm very scared of. So if tensions, or I'm worried about it, right? It's like I can't sleep at night. Like, oh, I'm so scared, right? It's, you get what I'm trying to say here. If tensions continue to escalate, U.S. securities regulators could force Chinese companies to delist from U.S. financial markets so long as they cannot independently verify the quality of their accountants' audits, affecting up to $1.3 trillion in stocks. So there's a lot of regulation happening right now, and Chinese stocks are having a tough time to verify, and as they should, I would want them to verify. The issue with a lot of Americans, they don't know, is there's like these Cayman Islands, VIEs, or whatever they call them, to where you don't really actually own the stock. You own it through a third-party subsidiary, because China doesn't allow other their companies to go directly to U.S. stock exchange. Just really weird with Chinese stocks. Now, moving on to Dr. Michael Burry, the famous investor documented in The Big Short for successfully betting against the housing market, and one has sold all of his U.S. stocks except one, a private prison operator called GEO. Right? So Warren Buffett added, also now we're looking at famous SEC 13F filings here. So Warren Buffett added to his position in Ali Bank through a classic value play. He also increased his holdings of Apple, which comprised nearly 41% of Berkshire's stock portfolio. Likewise, next page here, David Tepper, which is another legendary investor I follow, added 1.1 million shares to his Kohl's position. Now, I wanted to comment on that. That's really important, because if you look at the Kohl's here, Ross and whatnot, that's a bet that the U.S. consumer is going to continue buying stuff, okay? It's very clear that, like all recessions, and sadly, it affects the lower historically marginalized population. But, the way economists and the way capitalism works is we like to focus on the upper echelon of society and also the middle class, because they drive the majority of the economy, sadly. Okay. So they're essentially, what these legendary investors are doing is they're betting that the U.S. consumer is going to continue spending, which what we've been seeing, they are willing to basically take on more debt to essentially sustain their lives. Now, retail sales. If you remove sales at the gas station and auto sales if you take those out, retail spending actually rose 0.7% month over month. Now, if you parcelate and analyze Amazon Prime Day alone, July 12th to July 13th, you remember Amazon Prime? Consumers spent over $300 million, right? And much of it was going to beauty products, kitchen essentials, and Apple Watches. Now, companies like Walmart and Target have highlighted how inflation has changed consumer spending habits and pushed many Americans towards lower-end alternatives and frequently used products. Spending at discount stores, for example, was up 17% year over year in July. Now, there's going to be a more complete report at the end of the month. We're going to look at it, and we're going to see exactly how Americans are spending so we can understand the psychology of the market, okay? So if you like this type of series, very nice, short, and sweet to kind of get you updated to what's happening with the economy, please comment down below, and I'll see you on the next one.